Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mummy, and today we have a new guest to the show, and his name is David Erfle. So for those of you who don't know David Erfle, he is the founder of the Junior Miner Junky.com, is a self-taught mining sector investor, and he stumbled upon the mining sector in 2003 as he was looking to invest into a growing sector of the market. After reaching the gains made from 2001 bottom in the tiny gold and silver sector, he became fascinated with this unique market. In 2005, he decided to sell his home and invest the entire proceeds from the sale into the Junior Mining Company. When his account had tripled by September 2007, he decided to quit his job at telecommunications equipment buyer at UCLA and make investing in this sector his full-time job. He personally survived two bear markets, witnessed incredible sector changes, and had to alter his investment philosophy numerous times in order to adapt to the changing market conditions. So David, welcome to the show. It is a pleasure to have you with us today.
Pleasure to be here, Ben. Thanks a lot for having me on.
So David, let's get rolling here. If you could just start by sharing a little bit of your background, tell us more about your formative years growing up. What led to the birth of Junior Mining Junky? And lastly, what inspired you to become a newsletter writer?
Sure. I grew up in Southern California and still live there. I've lived in other places around the world, but came full circle back to Southern California. Like I said, I grew up here, and I attempted a few different careers that really didn't take, and I finally got a really good paying job at UCLA. Buying all the telecommunications equipment and maintaining the storeroom where all that equipment was kept. But I found myself having a lot of downtime because I came in and I pretty much streamlined the system where I only had to work a few hours a day. And so I had all this time in my hands, and I began to invest in the stock market. I saw this was in the early 2000s. I watched all my friends getting rich in the stock market on tech stocks. So I said to myself, well, these guys don't know what they're doing. I don't know what I'm doing. It seems like it's pretty easy. So I took out an equity line of credit on my house. I took out an equity loan on my house and put it all into the stock market. And started to do really well. And then the bubble burst and I promptly lost half my money, which was basically the best thing that could ever happen to me because it taught me to really start to get serious. And then I stumbled upon the gold sector and the junior mining sector in 2003 because I was looking for something that was going up while everything else was going down. And the more I got into it, the more I really got into it. And I said to myself, well, if I want to make a lot of money, then I better understand money. So then I started to get into Austrian economics. And I came upon a book called The Creature from Jekyll Island. It taught me about the Federal Reserve. That really opened my eyes. And it really got me into the sector. And like you said in the beginning, and I don't recommend this for those at home to do what I did, because at the time I was restoring an old house here in Pasadena and I was just about done with it. I did all the work myself. And but I watched my house go from, I paid like $290,000 for it. And I said, well, I could sell this place for $700,000 and basically become have financial independence if I play my cards right. But at the time, I didn't have any children, I didn't have any responsibilities. So I was able to take a gamble like that, sell my house and put everything into the junior sector. And it paid off. I did really, really well. And, so I quit my job in 2007 and I started to do it full time. And as far as the newsletter is concerned, I didn't start that until about 4 years ago. I'd been in the sector for about 15 years, and Kitco asked me to do a weekly column for them in early 2016. So I started to do that, and I really enjoyed it. And first of all, I'm like, I'm not a writer. I don't know how to write. So they just let me work it out. If you go back and you read my earlier articles, they're terrible. So that they let me work it out on my own. And I really, I owe them so much for letting me do that, because it really brought, it got me on the map. People knew who I was, and they started sending me these emails saying, you should start a newsletter. If you do, I'll subscribe. So I said to myself, well, it's pretty stressful making a living just trading in the stock market. So I just had a child for the first time, and I said to myself, well, I better have some steady income. So I started the newsletter, and it's done really, really well. And I got great subscribers, and the sector's doing, it's not doing great right now, but I know how to maneuver the sector. I've taught myself how to trade in this market, how to invest in this market, and it's very high risk and high reward. So I've taught myself how to do it successfully, and I'm passing on my knowledge to my subscribers.
Absolutely. So David, thanks for sharing that background of kind of your formative years, as well as how, the Junior Miner Junky started. How did you come up with that catchy name?
It's funny. You're the first person that's asked me that in an interview. And it's funny. When I decided to start the newsletter, everything just fell into place. I came up with the name in like 5 minutes. And I was talking with my wife, and I'm like, I'm just a junior miner junkie. Like, well, that's the perfect name. And I spelled the junkie with a Y because one of my favorite writers when I was growing up was William S. Burroughs, and he wrote a novel called Junkie. And I just kind of stuck that spelling in there as kind of like a little homage. But yeah, I mean, the name just kind of came to me.
I'm happy that I was able to be the first person, to ask you that and get a little bit of background. But David, something that caught my eye, I follow your work, I listen to your interviews, but you recently published a research article, which is gold stock trains are leaving the station. Could you please share with my listeners, what this article was about?
Okay. Well, to be specific, it's junior gold stock trains are leaving the station, because it's important to be specific, because it's a culmination of a series of articles that I've been writing for the past few months that this sector is creating, I believe is creating a significant bottom. After the sector rose so quickly from the ashes of the March 2020 liquidity event that took place in the marketplace, the juniors were hit harder than most any other sector, because junior stocks basically they don't throw off any cash flow. They consume capital, and at that time, the capital markets were already not very attractive. There wasn't a lot of money coming into the sector. The gold price had finally broken out, out of a 6-year base, but there still wasn't a lot of money coming into the sector. So a lot of these juniors needed to cash up, and they weren't able to prior to the liquidity event that took place, at the end of Q1 in 2020. So they were sold off the most of any other sector, and they created an incredible opportunity. And fortunately, I was able to get into a lot of those stocks at that time. But I know your question was about what this particular article was about. So basically, I preempted the fact that these juniors are starting to take off with the fact that the Federal Reserve is basically in a catch-22 situation, because on one hand, they're being asked to bring inflation under control, which basically is now running at an annualized rate of over 11%. So that means they need to tighten monetary policy. But on the other hand, this is the world's largest central bank we're talking about, and they're expected to subsidize government spending, which means that they have to ease monetary policy. So, we've got, these spending bills that are being passed right now as we speak, all this deficit spending that's coming in here, and the Fed's, basically in a rock and a hard place. And I think smart money began to wake up to this situation on the very last day of Q3. Because what was going on right into that last day was the mining sector was being sold with abandon. We have something called tax loss selling season, which really hits this sector a lot, during the end of the year. But this year it started early. Tax loss selling started at the middle of June, because in the middle of June, what happened was the Fed started talking about tapering, right? They started about tapering their huge stimulus program, right? And that basically was the signal for investors to sell their gold stocks for tax loss. They basically chase these things from the prior cycle, and they're down on them. They're like, wait a minute, I've got all these losses in these gold stocks and these juniors and these gold stocks. I'm going to take my tax loss now and rotate that money into the stock market because it keeps going up. Why should anybody invest in high risk gold stocks if the stock market continues to go up? But that has created an incredible contrarian opportunity, because let's face it, the only way to make money in this sector is to be a contrarian. I mean, you have to buy fishing lines and sell rhino horns in this sector to make money. And I'm telling you right now, there's a lot of fishing lines out there right now that are being created by all this tax loss selling, and by the fact that the stock market continues to trade at higher levels. So it's creating this incredible opportunity. If you have money and you have patience and you have the wherewithal to pick the right companies to hold for a long period of time.
David, thanks a lot for dissecting your article and hitting on those key points. I know it even has helped me. Something that I just want to ask you about is, ever since the Fed announcement on November 3rd, what exactly has that changed for precious metals?
Well, basically, it's something I touched on in my previous answer. It's a light switch came on with smart money. At the last day of Q3, that was a lot of book squaring going on. So there were a lot of profit taking. I think some profit taking from smart money was coming out of ridiculously overvalued tech stocks, and rotating some of those proceeds into miners. And I'm saying, the smart money starts off early and in this sector. And it's such a tiny sector, Ben. If you take the entire mining sector, the market cap of the entire mining sector is less than $600 billion. That is infinitesimal. I mean, all it takes is just a few big hedge funds coming into this sector, and it can really move it. I mean, the GDX went up about 30% from what I believe was a significant low on the last day of the quarter of Q3, the last trading day of September. I think that was a significant bottom. And now we're seeing some profit taking coming in after the miners were up 5 of the past 6 weeks. And both the GDX and the GDXJ, which is the Junior Miner ETF, they both hit significant resistance levels. And so now when they hit those significant resistance levels, if you take a look at the volume on up days from that last day of September low is much higher than the volume on down days. That's another hint of accumulation going on in the sector. And it's, like I said, it's only the smartest of money that's getting into this sector now. We're not even close to dumb money getting into this sector. They're still chasing overvalued stocks right now. But I think there's another liquidity event coming on the horizon. It might be here as early as Q1, which is why you're seeing the dollar continue to take off here, because you see a lot of safe haven capital going into the US dollar.
Okay, thanks a lot, David, there for clarifying that question and giving a valuable answer. Just because, I do follow also someone like Peter Schiff, who talks about, the macro picture very well. The dollar, which you had just mentioned, right? That's something that is one indicator that we watch of many. But why else is it moving higher? What's going on?
It's because basically, like I said, these central banks are trapped. It's not just the Fed. dollar index is a basket of other currencies, right? So it's traded against a basket of other currencies. And the biggest currency in that basket is the euro. Over half of it is the euro. So the European Union has completely destroyed their bond market because their rates have been negative since 2014. And even though the Federal Reserve is hinting about raising interest rates next year, already starting to taper their bond buying program of $120 billion a month. The European Central Bank is nowhere close to that. They can't be. So they're not raising rates anytime soon. They're not slowing down any stimulus anytime soon. So it's these other currencies that are weak against the dollar, and the dollar is the world's reserve currency, and it's the deepest, most liquid market is the treasury market. So safe haven capital is going in there, and that's where all the capital went when you had that liquidity event in 2020, at the end of the first quarter of 2020. But the dollar spiked higher. People were selling and putting it into the safe haven dollar. You even saw gold get hit too, because a lot of the profits were being taken in gold to put into the safe haven dollar for a short time being. Then, as soon as the Fed announced that huge stimulus program, which has doubled their balance sheet from 4 trillion to almost 9 trillion now. That's when the gold took off. You saw the gold price go from 1045 at the bottom in late 2015. It doubled into August of 2020 when it hit 2089. That's a double. And now it's been correcting that huge move. And that huge move, basically a Fibonacci 38.2 Fibonacci retracement from that move is 1675. And that's where it spiked down to 3 times. It's tested it 3 times. And that's only a 20% correction. So, I mean, I know I've gone away from your question, but basically the US dollar, the reason why it's going up so much is because it's acting as a safe haven right now.
So David, we've already spoken a little bit about Fed making the move of tapering. What do you think will be the Fed's next move before the end of this year? And what will be the catalyst for the next announcement?
Well, you still got the debt ceiling problem. Janet Yellen came out and said, we could push back the debt ceiling situation now from December 3rd, to December 15th, right? So basically, the gold price right now is all about 2 things, right? It's about inflation and Fed speak about interest rates, about tapering and about interest rates. Those are the primary catalysts. The primary catalyst on the upside is inflation, and on the downside is Fed speak about raising rates. But we know that whenever the Fed finally does raise rates, after talking about it and talking about it and talking about it, when they finally do raise rates, that is a huge catalyst for the gold price to finally take off. When the gold price bottomed, as I mentioned, back at 1045 at the end of December in 2015, the catalyst was the Fed announcing its first rate hike. And so that rate hike now is starting to be priced in sooner and sooner. So right now, the gold price is still volatile now between 1880 and like 1750. That's the tight range it's been trading in. It broke out above 1835, which was a strong resistance line on the back of that incredible inflation number coming out of 6.2% out of the CPI a few weeks ago. But today it's come back down to test 1800 as the dollar continues to climb, because the Biden administration announced 4 more years for Fed Chair Powell, as opposed to announcing Lael Brainerd, who was basically the only Democrat and a super dub that a lot of people speculated she was going to get the job. But that was a catalyst with Powell being renominated, that was a catalyst for more profit taking coming into the gold price. You've also got options expiration coming up tomorrow. You've got lower holiday trading right now, where a lot of shenanigans going on. So I mean, based on the reaction from the gold shares, I don't expect this weakness to last much longer.
Okay, great. Thanks for bringing up those key points there, David. And so that makes me kind of think, especially with today, the gold and silver price getting hit, I think it's always important for retail investors to remember that, it's not always about the day to day, right? We also got to
Oh,
look at
absolutely. Yes, big picture.
So that's my next question here is, are
Mhm.
you bullish or are you bearish on the current precious metals market? And how deeply oversold is the current market?
Well, it's the shares that I'm more interested in. It's the shares that are more deeply oversold in relation to the gold price. Because when I believe that the gold price, when the miners bottom on that last day of September, the gold shares were at that point were trading as if gold was at $1,500. The last time they were trading at those levels, gold was at $1,500. So basically, the market was pricing in what they thought that the gold price was going to lose that 1675,382 retracement level and go to the 50% retracement level, which is about 1570. That's what was being priced into the miners. But that has changed now, where the miners have basically both the GDX and the HUI Gold Bugs Index, they've created an inverse head and shoulders bottom. And now that they've broken out of those head and shoulders, inverse head and shoulders bottoms, the neckline of those head and shoulders bottoms are being tested right now today, and they're bouncing from there right now as the gold price remains down and under pressure. So basically, as far as the gold price is concerned, I'm not too concerned about how much lower I think it can get, because I already think that the selling that most of the selling has taken place in the mining sector, which is where I'm invested. I own physical gold and silver, of course, but I don't look at those as investments. I look at those as basically safety nets. I hope I never ever have to liquidate them. I hope to pass them on to my son. I mean, I as far as I think that the real leverage lies in the mining sector, and there's an incredible opportunity happening right now, and that's basically where I like to concentrate my investments right now.
That's one thing for sure I would want to comment on is, there are different risk levels, but the junior mining sector can be incredible, right? The gains, especially if you do your own due diligence and you have your patience and you have conviction about the macro picture as well that's connected with it. You could do really, really well. But when will precious metals have their day in the sun? And if so, what price levels do you anticipate will be reached for gold and silver by the end of 2022?
If you take a look at the big picture chart of the gold price, and I'm talking about a 21-year chart. If you bring up a 21-year chart of gold, we're basically in phase 2 of a secular gold bull market. Phase 1 began at the turn of the century, with gold double bottomed at 250, and then in a decade it ran to 1925. Sure, there was a few hiccups in there, 2008 especially, and that's another point I want to bring up. In 2008, when the gold price got above $1,000 for one day, and then after that took place, I think it was basically signaling that, hey, there's some trouble coming into the marketplace, and it definitely was a bellwether for that, because we saw what happened with the financial crisis of 2008. I think gold was signaling that. But when the liquidity event started, gold was hit as well, and it went down to 620 from 1,000. But it didn't get back over 1,000 for 18 months. And I think a similar situation now is happening at the $2,000 price level, right? We had $2,000 an ounce closed above on a daily and a weekly basis, but not a monthly basis. And basically, I think it's creating a handle in what is known as a cup and handle formation, which is the most bullish chart formation, especially if it's a long-term chart. So the run up from the turn of the century, 2001 to 2011 was 1925. That was that created the top of the cup, and then the cup took a decade to play out, and the top of that cup was over $2,000 an ounce. And now the handle's being created. And that handle is now 16 months in progress. So I think it's probably going to take a few more months for that handle to complete. And I think it might happen around the time where the marketplace actually believes the Fed is going to hike rates, or when the actual act takes place. Because I don't know if you noticed what happened when the Fed actually tapered. It became a buy the news event, right? Because they started talking about tapering in mid-June. Okay, sell our gold stocks, sell. Smart money started to buy early before that taper announcement, figuring the same thing, that was going to be a buy the news event, and indeed it was. Exacerbated by the inflation that continues to rage, by a fifth CPI announcement that over 5% that was actually 6.2%, and like I said, annualized inflation now is 11%. And I'm sorry, it's not transitory. And so basically, once that handle is completed, I think once that handle is completed, you're going to see a move towards $3,000 pretty quickly.
So David, thanks a lot for kind of giving that macro picture background, as well as using technical analysts and kind of giving us a little bit of a feel of price action as well as what's going on there. I know there's some other people like Tavi Costa as well who talks a lot about that and is constantly educating individuals. So I really appreciate that. So David, what advice would you give my generation about precious metals or investing in resource stocks? And what should they do, and which markets should they invest in?
Well, first of all, I would recommend getting some education on money. Understand what money is, where it comes from, how it's created, its history, how we led up to the situation we're in. Educate yourself on that, which that will naturally gravitate you towards putting some of your money into a safety net, which is physical gold and silver. And then if you have some money to play with, to invest in, then I would say get into the miners in the mining sector. But there's a lot of leverage there, but you really have to know what you're doing. A newsletter service like myself, and there's a few others that I would recommend that can educate you on that and teach you how to trade this sector.
Okay, great. Something that I find that's really hard as a retail investor, I know I've experienced it, and I know other people have experienced it, even individuals like Jay Martin, who was actually the first guest on my show. It's really hard to predict and kind of understand, when to take profits, especially if you have that long-term investor mindset where you have the conviction, you're in it for the long game, you're being extremely patient, or as Rick Rule says, you have a lot of courage. But I once heard you say on a show that, you also do have to take your profits sometimes in the short term off the table from gold and silver stocks once they appreciate in value. So has your approach changed at all, or do you still follow this philosophy? And what about remaining invested in your positions during the length of the bull market in precious metals?
Yeah, that's a great question, and it's going to be a lengthy answer because I've left a lot of money on the table in the past, and the more cycles you go through, the more you learn that, hey, once these things really take off, you have to take some money off the table. I don't care how bullish that you believe not only the sector is, but the stock is for the future. A perfect example is what happened from March 2020 until August of 2020. In just 4.8 months, we saw incredible moves in some of these juniors, 5, 10, 20 times moves. And a lot of people, they didn't take their profits, and I'm not saying take all your profits, because it all depends what kind of investor you're at, but but I'm in this for the long term. But I manage my portfolio, which is $1 million portfolio, and it's a high net worth portfolio. So when you have these huge, incredible gains in a short amount of time, those gains are going to consolidate. So you want to make sure to take some profit off the table and bank some of that profit. And that's what I do in my portfolio. Since it is a high net worth portfolio, I basically bank all my realized capital gains. I take them out of the portfolio. So, because in the past, I made so much money, and then I watched so much of it disappear, which is a great thing to happen, because it teaches you these lessons. You don't learn these lessons until they happen to you. I learned the lesson, like I said at the beginning, at the top of the show, when I said, that I put all this money into tech stocks and watch half of it disappear. It was the best thing that could ever happen to me, because that's how you learn how to make a lot of money in the sector, is lose a lot of money first and learn from those mistakes. And I've learned from those mistakes, and now my average realized gain return in my portfolio that I began at the beginning of 2016 has been about 22%. I've averaged realized gains, and I still have unrealized gains of about 50%. So, you never get too greedy in any sector, and especially in this one, because gains can evaporate very quickly, which a lot of people are finding out right now after what happened last year when it ran up so quickly. It's soured a lot of people on this sector. Like, I hate gold stocks. They suck. Sure, they went up for 5 months so far, but and these are the people that chase. You can't chase stocks in this sector. You have to do your due diligence. I've watched companies for years before I made an investment in them. You have to get to know these charts. You have to get to know these companies, get to know the way they trade, look at their valuations against their peers, look at their valuations against the gold they got in the ground and where it is, what jurisdiction it is. So many things you have to factor in. And then you pinpoint that perfect entry point. And then if you get it wrong, and believe me, you're going to get a few of them wrong, you have rules to get out before it gets worse. This sector makes you humble quickly.
You said a lot there. That was a lot to digest, but definitely being aware of, your due diligence is huge. And then as well as having your rules, which kind of sit at the end, but even when it comes to taking profits, right? Especially if you're a long-term investor, having those rules. I am curious, about how much percentage, and I'm sure other listeners were also kind of curious about, yeah, okay, but when you do take these profits, what is your rule that you go by, and how much percentage?
Well, my personal rule is, if I get into a company and it's down over 20%, unless it's a micro cap, and micro cap juniors that are early stage, I tend not to put a lot of money into them. It doesn't take a lot of money to invest in those to really do well. If you get a hold of one that has a 5, 10, 15 times gain, in a short amount of time. But if it's an early stage micro cap, I don't adhere to that rule. But if I get into something like a developer, or a growth oriented producer, and it goes down 20% from my entry point, unless I feel the market has just made a significant bottom or is close to doing it, I sell it for tax loss. And I did that on a handful of stocks, between mid-June and August, and a couple of them I bought back, because all I messed up was the timing. I didn't mess up on my analysis of the company. I just messed up on my timing when I got into it. So I'll take the tax loss, and then I'll get back into it when I feel that the sector has bottomed, and once the stock has bottomed technically, or in relation to its peers, it's become a fantastic fundamental value, which happened a few times over the past month or so. So, and it's on the upside. If a position becomes 10% of my portfolio, I'm going to trim it. Doesn't matter, if this stock is going to go to the moon. I'm lucky I get it early. Whatever my reasons was, I stick to my rule. If it gets too big, I trim it. So those rules have served me really, really well.
So David, going to my next question, I just find your whole story just fascinating, just the way you discovered the space and the amount of time and research that you put into learning about, the mining sector. But I'm curious to know, who are your greatest mentors? Where do you suggest that any millennial investor go to better educate themselves before making any investment decision?
Well, my first great mentor passed away several years ago, Richard Russell. He's the first newsletter I discovered back in 2003. And when I started to really get into investing and I discovered this sector, he's the one that got me into gold. And he had incredible mind, made millions of dollars for many investors over the years. And he died in his 90s and was just an incredible influence. But more recently, Martin Armstrong has taught me a lot about macroeconomics. Globally, he puts together the global economic and political environment to where you can understand where things are going. His economic confidence model, which is based on pi, it's just incredible. I mean, it's for 40 years, it's predicted major economic events to the day. I like to read his blog and follow him. If you could get him on your show, he could really educate your investors about what's happening economically here and what will possibly happen economically in the future.
Okay, great. Awesome. And so, David, what are your top stock pick recommendations for 2022?
Well, I don't like to give out too many stock picks, but I could talk to you about a couple because basically my service is kind of unique. What I do is my subscribers basically look over my shoulder and they have access to my entire account. You know, what I buy, what I sell, when I sell it, when I buy it, how much I made, how much I lost, you know, warts and all, everything's shown. And I give them a 24-hour heads up before I buy or sell a core position. It's kind of a we're all in this together type of newsletter, because basically, you know, that's what I ask of the junior companies that I invest in. One of the first questions I ask is how much of the stock do you own, and what did you pay for your stock? You know, they have to be aligned with me before I'm going to invest in them. And I would expect nothing less from a newsletter before I invested in it. I want that newsletter writer to be in line with the companies. If he's gonna recommend stocks to me, then he better be invested in it too. So there's two companies I can tell you about. They're both developers. They're both in they're not in top tier jurisdictions, which is why they remain undervalued. The first one is Bluestone Resources. It's a junior gold developer that is operating in Guatemala, and basically it's controlled by one of the top mine building groups in the world, which is the Lundin Mining Group. They're serially successful, and the stock is very cheap because of the political situation in Guatemala, but they have very good relationship with the government there, and they basically their Cerro Blanco project it's a classic low sulfidation epithermal gold silver deposit, and it's got bonanza high grade style veins and with a low grade disseminated mineralization. And basically recently they announced a significant upgrade to the resource in June to 3.1 million ounces, and they have to alter their mine permit because it's got an underground component now. So there's been no news recently, you know, and no news for a junior company is basically very bearish for the short term, especially in a market like this when there's no news, right? And there's tax loss selling going on. People, why am I holding the stock? There's nothing going on with it. I'm going to sell it, maybe come back to it later. And that's presenting a great opportunity in the stock right now. I was fortunate. I got into it earlier in the year. I sold it for tax loss, and then I got back into it recently at a low. And fortunately, it was. I think it could have been the ultimate low here because the stock really popped after I got myself and my subscribers in it. So, but they've got 28 million cash. So they've got plenty of cash waiting for this permit, which will probably be issued mid next year. And then they'll put a financing package together and start building it. So that's one stock. And then the other one is Bear Creek Mining. And they're already at the finance stage, and they're in Peru. You know what's been going on with Peru recently. You know, they've a very far left candidate come out of nowhere and win the election. it freaked everybody out, and the stock went down 75%. Right? And I know this company like the back of my hand. I've been in and out of it a few times in the past 15 years or so, and I've got a good relationship with the management there. This is a fantastic project. You know, they spent 15 years de-risking it, and it's a world-class silver lead zinc project. Like I said, it's at the finance stage. All they have to do is get the financing package together. And recently, I got my subscribers back into it and myself back into it right before the president, Pedro Castillo, basically gave his seal of approval for the project, because they want their piece of that pie. It's a big, huge project. It's going to bring a lot of money into the Peruvian government coffers. So, and it's still dirt cheap right now. It did have a huge pop on that news, but it's come off a lot, and it's creating another lower risk opportunity to get into it.
David, thanks for talking about those companies for people to check out. As always, make sure you do your own due diligence. But yeah, I appreciate you for sharing a couple there. So David, moving to my next question, as you know, the purpose of this podcast is to inspire people to achieve greatness and enhance their overall personal well-being. So what is your definition of greatness?
Well, as far as what I do for a living now, I think the biggest thing for me is to be as transparent as possible and upfront as possible with not only my readers of my column, but especially my subscribers. I don't take any money from companies. I don't take any money from Kitco. Before I started this newsletter, the only income that I derived was from my trading abilities, and now I do have an income through the newsletter. But as just being upfront with everybody and being completely transparent, I mean, it's been a great approach for me, because I don't get any complaints from anybody. I think I've had 1 or 2 complaints the entire 4 years that I've had this service, because they see that if the sector incurs a lot of damage and a lot of selling, they see that I'm being hurt along with them. I'm basically putting my money where my mouth is every single day, and just being truthful and upfront in everything that you do, and remaining humble while you do it. I think that is that will really help you succeed in anything.
Absolutely. So David, who is a future guest that you would like to see on this show?
Oh, I mentioned that. I think it'd be great if you could get Martin Armstrong. There's a fella named Bob Moriarty. I don't know if you've probably heard of him. He runs a website called 321 Gold. He's a cantankerous old investor, and he's an incredible talent, incredible mind. He's taught me a lot about the junior sector. He's wrote a couple of books that are fantastic that everybody should buy. They're very easy to read. They're short. They're to the point, and he's very frank and honest about his approach to investing in this sector. And he's also a great interview. Just a real character.
Awesome. Great. Well, I'll add both those names to my list. I actually haven't heard of both of them until having this interview with you. So I appreciate you for, bringing up those names for both myself as well as my listeners. And David, where can our listeners go to connect with you online? Because you have some great work.
Oh, thank you. My website is juniorminerjunky.com. And every week I put out I have a weekly column on Kitco that comes out every Friday morning. So you could find my work there as well.
Awesome. Great, David. Well, David, I want to end off by taking the time to really thank you for being here. Thank you for, educating both myself as well as my listeners. And yeah, I look forward to having you on again.
Oh, sure thing, Ben. Me too. It was a lot of fun.
Thank you for listening to the Living Your Greatness podcast. If this show has added value, please subscribe, leave a rating, and make a review. This podcast is for informational purposes only and is not to be considered personal, legal, or investment advice or a recommendation to buy or sell securities or any other product. It is based on opinions, current events, press releases, and interviews, but is not infallible. It may contain errors, and Living Your Greatness offers no inferred or explicit warranty as to the accuracy of the information presented. If personal advice is needed, consult a qualified legal, tax, or investment professional. Do not base any investment decision on the information contained on Living Your Greatness or our videos. Thank you for listening to the Living Your Greatness podcast. If this show has added value, please subscribe, leave a rating, and make a review.